Good afternoon and welcome to Nasdaq Sector Talks. I'm your host Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Josh Ellman. He's a Senior Specialist with Nasdaq's IR Business Intelligence Unit. And we're going to focus on Love 'em or Leave 'em, Valentine's Day edition for the consumer sector. As we all know, the consumer is the tape of the have and the have-nots. Josh, thank you so much for joining us at MarketSite today. Perfect timing to talk about the haves and the have-nots. Do we love them? Do we leave them? Before we get into that, tell us a little bit about your role with the intelligence unit.
Yeah, so I sit in the surveillance world under the consumer team, and we work with a wide variety of companies in the consumer space. We work with retailers, consumer staples companies, restaurant issuers, as well as some leisure names. We really get a whole broad perspective of what's transpiring in the consumer world.
All right, well, let's talk about the consumer space right now. There's so many facets of it. You have discretionary, you have staples. You could even argue electronic and technology names or consumer names as well. How do you feel about the sector right now?
I think it's a little bit tenuous. You had retail sales this morning that came in much weaker than anticipated. And even if you back out some of the gas sales, the retail sales figure for December came in much lower than anticipated. So I think ultimately, in terms of love 'em or leave 'em, I would actually leave the consumer in terms of his or her overall spending. And the reason why I say that is I think the consumer is ultimately up against a wall today. You look at some of the various economic reports that have come out over the past few weeks, and it shows that the consumer is feeling very stretched. I think you had the New York Fed the other day say that 7 million auto loan customers are behind on their payments by 90 days. You also see mortgage applications falling, and you see confidence levels continuing to decline as we head into 2019. So I think ultimately 2018 on the whole was a pretty good year for the consumer, but at the end of the day, I think 2019, we're going to see a consumer that's feeling stretched, and I do think the overall sector will be very choppy and tenuous.
And that's quite disappointing because that really was the sweet spot. The real bright spot in the economy was the consumer, and it's a big deal. 2/3 of our GDP is on consumer spend, so I'd be concerned if I was an economist.
Yeah, absolutely. I mean, these numbers were quite alarming. I think the market has digested them, and we've actually turned a little higher in afternoon trading. But at the end of the day, it's taken us for a pause a little bit. And you also look at too what transpired in the overall equity market in December, and maybe that had a large impact on consumer feelings, consumer sentiment, and ultimately consumer spending for the holiday season, as you had the NRF come out and say holiday spending grew at about 2.8% for 2018, and that was much weaker than anticipated.
Right. What was it, like 4.6, almost 5% they were looking at for holiday, I believe?
Well, yeah, exactly.
Yeah.
And overall consumer spending in 2018 was pretty strong at 4.6%, but at the end of the day, the level of holiday spending was rather lackluster.
Is there any area of consumer that you like, any discretionary, or is it just overall you're kind of taking a step back here?
No, I mean, I think ultimately, I think the staples sector is a sector to look at. I think it's a unit and sector that has underperformed over the last few years as the risk-on discretionary trade has been in vogue. But at the end of the day, I think some of those companies are trying to get the algorithm right, and ultimately might be a good place to look if you're looking for some safety in 2019 but still want to invest in the consumer space.
And your group also looks at sports betting.
That's correct.
That's cool.
Yeah, we work with leisure names, so it's an area of focus that I've been working on and helping to advise my clients on. And we're seeing a lot of interest regarding sports betting, especially amongst casino companies. And I think ultimately you're going to hear more and more about legislation coming down the line regarding sports betting, and we're seeing that today. And I think you see some of the numbers coming out of the states that have enacted sports betting, such as New Jersey, and they're just blowing it out of the water. And I think even our home state, New York, is going to be rolling out some regulations pretty soon to be allowing sports betting, but at physical casinos instead of mobile, which New Jersey has. So I think it's a complex segment. It definitely requires someone to monitor the situation and the legislation closely. But I do think more and more states will begin to roll out legalized sports betting.
I wonder if sports betting is almost going to be like alcohol and tobacco, that it's going to do well regardless of where we are in the economic cycle.
Yeah, I mean, that's the hope. I think a lot of these states are looking to fill their coffers with some of the tax revenue that will come from sports betting. So I think there's a lot more to be said and had about that. But at the end of the day, too, you do have the federal government trying to step in here. A few weeks ago, they released a ruling, an updated ruling on a piece of legislation or a law, the Wire Act. And so there is a lot of consternation and uncertainty right now regarding how sports betting will evolve over time, because what this Wire Act did was potentially say that interstate gambling over internet lines or over telephone lines should be prohibited. So I think a lot of companies are scrambling to trying to figure out what this means for their ultimate bottom line. And also, too, these state governments are trying to figure out what is the federal government telling us to do in terms of how we structure legalized sports betting.
All right, everybody wants a piece of the pie, don't they?
Yes, absolutely.
All right, Josh, thank you so much for joining us at MarketSite, and thank you for